Hi, I'm Lisa Leiter. In Chicago Business Today, banking reform. Financial services reform is entering the final stages on Capitol Hill, just as banks are beginning to recover from the worst recession since the Great Depression. But there is a little noticed item in the Senate version of the bill that could spell big trouble for some local banks. It takes aim at a type of investment in banks called trust-preferred securities. Earlier, I sat down with Crain senior reporter Steve Daniels to find out exactly what these securities are and what the language in the bill would mean for some Chicago area banks. So Steve, let's start with the basics here. What is a trust-preferred security and why are they so important to banks?
A trust-preferred security is sort of a hybrid between debt and equity. It's very favorable capital for banks. It's cheaper than just plain common equity. Banks have made very liberal use of trust-preferred securities over the last 15 or 20 years, and banks have a lot of it on their balance sheets.
So this Senate bill, the language in it, takes aim at these trust-preferred securities. What is it trying to do here?
Well, it doesn't take direct aim at trust-preferred securities by name. What it's trying to do is make banks, holding companies, and banks similar in the types of capital that they're allowed to have. And the way, it's kind of arcane, but the way trust-preferred securities work is that the holding companies offer them and then put them into the bank as the most favorable type of capital, at least the way regulators see it. So this language would make that so that trust-preferreds would not be treated in that way.
So which local banks will be most vulnerable here if this were to go through?
Virtually every bank. I mean, really in the market would be vulnerable in some form or another. Now, there's two types of banks these days. There's banks that are reasonably healthy, that are able to lend, and that can buy other banks or failed banks. And then there are banks that are sort of on the brink where anything bad that happens to them could put them in a raise capital or die kind of situation. So obviously for the ones that are in the raise capital or die kind of situations, this would be terrible because it would remove yet another form of capital that they have. For the banks that are healthier, it wouldn't be so dramatically terrible, but what it would mean is that they wouldn't be able to lend as actively because the capital that supports that lending would be reduced.
Now, Senator Susan Collins authored this. What was her intention here?
As I understand it, I mean, the intention was to make holding companies for banks stronger, to force them to have better quality capital, at least equal to what the underlying banks do. She has, I understand, made some statements to the effect that she didn't want this to have such far-reaching consequences on all of these smaller banks, so we may very well see some efforts to try to soften the impact of it.
I imagine the banks are lobbying for just that. What's the next step here? When are we likely to see some action on this?
The next step is for a House and Senate conference committee members to meet to hash out the differences between the House and Senate bills. That will happen very shortly. It'll start next week. The goal is to get a bill to the President's desk by July 4th. So this is all going to be addressed and answered in the next few weeks.
And what are your sources telling you will likely be the outcome here? What do they see happening?
I think bankers expect that this will not go through in this form because the impact will be so draconian if it does. I would expect that's probably true, but exactly what form it would take, grandfathering existing trust-preferred securities, giving banks several years to replace the capital, something along those lines. I think that's what bankers expect, but nobody in a position of authority or who really matters has addressed the topic yet, so we'll see.
All right, Steve, well, something to pay attention to as the summer begins. Thank you so much.
Thank you.
And that's this edition of Chicago Business Today. For more on this story, be sure to check out this week's print edition of Crain's or chicagobusiness.com. Thanks for watching. We'll see you tomorrow.